I work with Microsoft Startup Growth Partners. We have 7 accelerators globally, and I help the companies scale their businesses once they've graduated from our accelerators. It's worth understanding, I think, Microsoft do this because they value the ecosystem, and we really want to help the companies grow and scale. We don't take equity in the companies, so it's all to increase value for them, not for us necessarily. So that's a quick thing about me. I'm going to ask each of the panelists, well, actually, let me introduce the topic first. So we're going to talk about tech and fintech. So the interesting side, I think, of the conversation, hopefully. And really what we want to do is give you some insights into how each of these folks thinks about, the technology in their companies, and also when they deal with technology from customers, etc., and partners. I'm going to ask them each to present for a couple of minutes to you. So maybe if I ask Alex first, and then, we'll go Charlie first to present ComplyAdvantage.
Welcome to the first talk on getting the tech back into fintech. My name is Charlie Delingpole. I started this company called ComplyAdvantage back in March 2014. It's my third company, and I guess the kind of basic rationale behind what we're doing is that not all superheroes wear capes. Some of them fight terrorists and financial crime using big data. So as everyone in fintech knows, a big challenge with payments, moving money around, and transfer of funds is that some of that money could go to ISIS, the Taliban, or Al-Shabaab, right? So what we decided to do was find some sort of way of stop that happening. And the kind of key technology that we wanted to use to do that was machine learning, right? So if you open up a basic book on machine learning, a big part of it is classification. So you can tell if a tumor is malignant or benign. You can predict based upon the characteristics of a loan whether or not that loan will default, or the propensity of a lead to convert, right? So at the same time, if you look at feature extraction for particular characteristics of clients, you can determine whether or not that particular client is a terrorist or is laundering money. And so for the past 3 years, we spent $10 million building this huge stack to try and analyze all the data and then determine if someone's bad. Basically, evil takes many, many forms. There's a spectrum of evil. It can be from ISIS down to a dentist who was incompetent, right? So there's adverse media, terrorism, property theft, crime, fraud, and if you have clients, payments, customers, counterparties, employees, you have to monitor and triage these in order to comply with regulations around asset freezing, travel bans, all these things, right? So what we built is this huge system to constantly identify and analyze and alert people to these risks. And the way the incumbents have done that is via a huge team of researchers, whereas we've tried to set out and build the first system to kind of constantly monitor and evaluate those risks. And that's beneficial because that gives you much more up-to-date data. It gives you much more granular, accurate triaging of information. If 10% of your cost base is to do with compliance, if you're being fined billions of pounds a year, then the solution isn't throwing more people at it or just simply paying the fines. It's to kind of fundamentally reinvent and reanalyze the entire way that system's done. So that's what we built. And we raised money March 2016. We're spending that now on sales and improving technology. And yeah, so this is one case study. Asimo, a remittance firm, people want to feed their family. So if you have an uncle in Mogadishu, you aren't sure when you send him money if that money is going to Al-Shabaab to carry out attacks or if it's going to your uncle, right? So what we helped Asimo do is they get a feed of all the data. We tell them if particular payments are risky, if we think it's going to someone bad, and they can accurately manage their risk, and your uncle can get their money for their food in Somalia. Yeah, that's what we do. Thank you for your time.
Thanks, Charlie. If I can call on Alex next to tell us a bit about Plum.
Can you hear me?
Yes.
Yeah, cool. Right, so My name is Alex. I'm the co-founder and CTO of a company called Plum. It's a pretty young company. We started about 1.5 years ago. I wrote the first line of code back then. And what Plum is basically a chatbot for automating your money. So we live in Facebook Messenger, and we plug into your bank account, and we read data, and we use some algorithms, and we help you with what we think are the 3 pillars of financial well-being. Right now, we're delivering on saving automation. So when we read your data, we figure out whether you can save money or not, and then every week we transfer a small amount of money from your account to your Plum savings. Then we deliver on getting you some return. So we've partnered with one of the biggest peer-to-peer lenders in the UK, so you can choose to invest that money in peer-to-peer lending, and that earns you about 3% average yearly interest. And we've just started actually experimenting with getting you better deals on your bills. So if we know that you're, for example, with British Gas, and we can detect that from your transactions, we know if we can give you a better deal by, utilizing one of our partners, and then we tell you, do that, and you save, say, £200 a year. I'm gonna guide you through the user journey, because this is mostly kind of the background process when you connect it. Plum tells you certain things that are happening, so I'm gonna try and guide you through a few of the features that we have. So as I said, we live on Messenger, so when you go to our Facebook page, this is what you see. This is the Facebook Messenger platform. When you click Get Started, you see Plum basically welcomes you. The language we use is specifically kind of tailored for a younger audience. We target millennials, so we use a lot of emojis. When you say, yeah, I want to do this, you connect your bank. We support most of the banks, of the big banks, and soon we're going to be able to do credit cards as well. When you're done with all these, it takes about 2 minutes. Plum tells you, hey, I'm done, great, I'm going to analyze your data, and then I'm going to start saving money for you. So this is how basically people interact with Plum. So you can see that this is what's called a persistent menu in Messenger. We have a few buttons there. When you click home, you get these little nice cards. It tells you how much you have in savings. That one is your investments, and it tells you, your spending. You can, edit your profile, all that stuff. And we also have what we call a digest. So if you want to get like a bird's eye view of how you're doing with Plum, how much money do I have in savings? When was my last automatic saving? How much have I invested? When was my last investment? Other things, we surface that using this thing we call the digest. You might want to save, top up your savings. You can tell Plum, hey, I want to save like £5. Plum uses direct debit, and it moves that from your current account to your Plum savings. And we provide with like a journal of stuff that's going on, some stats that you might find interesting or not, but people want to look at how they're doing. You can also tap into Plum's saving brain in a way. So Plum says that it's auto-saving for you. You can change its saving mood, so we can make it shy or you can make it ambitious. That saves less or more. And you can also pause it. For example, if you're going for a trip and you want to save some more, you don't want to use all your money. You can tell Plum, hey, just pause it for 2 weeks, or you can pause it forever and you want to do everything manually. This is our investment functionality. So as you can see, we work with RaceSetter. This was a partnership we announced about 3 to 4 months ago. You can seamlessly connect through Plum, and you can invest as little as £10 in RaceSetter, and we handle everything for you. And finally, because we have all this data for you, that's how we make our decisions. We surface some of that. I mean, we don't do nearly enough, but we chose to do savings and investments first because that's where we thought we can provide them more value to start with. But we show you, how much you spend this week. We send you a message every morning saying this is your current account balance. Obviously, you can change that if every morning is too much. You can see your daily spend for the past week or your weekly spend for the past month. And we're aiming to, add more to this. And basically, yeah. So this is Plum at the moment.
Thanks, Alex.
Thank you.
Dave, tell us about post-quantum.
Thanks. So, yeah, welcome everybody. Thanks for your time. My name's Dave Askey. I'm the CTO of PostQuantum. We're a little bit different from some of the guys in that we don't provide a specific application. We provide kind of technology solutions, typically to larger organizations. At PQ, we're very conscious that as the internet has kind of, really exploded, businesses are looking to leverage its power, the scope, the reach that it can provide is fantastic, and they're obviously looking to benefit. But there are a number of risks and complex threats which emerge as businesses attempt to do that. Our goal really is to help these businesses leverage these new technologies, but protect them against and help them with the challenges of today and tomorrow. Some of the biggest challenges that we see and that we're talking to these larger institutions about are some of the very modern and up-and-coming threats. The emergence and the risk of the rise of quantum computing, for example. Everything we do at Post-Quantum is based in a foundation of cryptography, and the thing we started looking at is quantum-safe cryptography. You may have all heard of quantum computing and the up-and-coming rise of quantum computing and the benefits it will bring in the fields of things like machine learning or AI. You may not be aware that quantum computers will effectively smash all modern encryption in use today. They will largely render it useless. As a result, we need some alternatives, and that's what Post-Quantum spend a lot of their time focusing on and helping organizations with. Increasingly, we're seeing challenges with data loss, typically through insider threat, people within an organization gaining control and access to information that they shouldn't. Spear phishing, whaling, these are increasingly common challenges and tasks. Authorization, that's always been a problem, but increasingly non-repudiation, the challenge where somebody performing an action later comes back and disavows or disowns the transaction that they're performing. And then finally, who doesn't have problems with accountability and compliance, especially in this new heavily regulated world? So, what is this PQ toolkit, the technology stack that we use and we take to these organizations? Well, the first, not particularly branded fantastically, is this thing called PQ Check. This is effectively a biometric framework that allows us to do typical authentication, but also focuses on that non-repudiation component, typically by trying to bind somebody's identity to the specific action they're taking so that they can't come back at a later stage and dispute it. We have our quorum technology that's designed for addressing that multi-party approval problem. That's generally a way that we tackle insider threat, is to have multiple parties authorize or approve things before they take place. We do that using a cryptographically proven key splitting technique, for example. Typical secure communications, that's one of the very first things we focused on by building quantum safe encrypted WhatsApp effectively for NATO. And then who doesn't want to be playing with blockchain right now? We get heavily involved with blockchain. Whilst I personally came at it originally from a financial angle, Post-Quantum comes at it from a cryptography point of view. A very interesting point about blockchain is it's not quantum safe, for example. A bit of an irony I find to having an immutable record of a bunch of data you can't trust. So, and then down the bottom here, you've got some of the supporting case studies and people that we've traditionally operated with and worked for and with. Very quickly, so that I actually talk about some of the more specific technology solutions that we have provided. Here, quantum safe instant messaging. 2 years ago, we built this end-to-end quantum safe encrypted, what is effectively WhatsApp for NATO. Obviously, they're pretty keen to have secure communications. We've built things like this hybrid quantum safe VPN technology. Again, providing traditional VPN technologies, but wrapping it in a quantum safe cryptography layer so that if you are under threat potentially from that of a quantum computer, you're protected, but worst case scenario, you fall back to your default FIPS compliant VPN. And then finally, providing quantum safe signature schemes for the blockchain. Blockchain technologies almost always use lattice, almost always use elliptic curve as their cryptographic basis. That isn't quantum safe, and that is concerning a large number of people, and we use lattice-based signature schemes to provide quantum safe blockchain technologies. So we do a very wide range of stuff, not all just in the quantum safe spectrum. We generally provide a wide range of cybersecurity solutions and technologies, but it's a quick overview of some of the stuff we're playing with. So thank you.
All right. Last but not least, tell us about Curve.
Hi, I'm Shachar, the founder and CEO of Curve. Very short video that can be on the background while I speak. So the problem we're trying to solve is basically what you see behind you, our money is completely disconnected. It lives across different accounts, different debit cards, different credit cards, different apps that exist in accounting and budgeting. And right now, we're in a position that we don't really know what's going on with our money. And that's only what we have today. We see products like Plum and other products that come to the market that, as experts in the fintech space, we're not even aware of 90% of them, let alone ability to benchmark or access them. So we're on a mission to basically simplify and unify the way we spend, send, see, and save money. We're here to create the first ever connected finance category in the space. It layered on top of all the stack that we already familiar with, our banks, the merchants, the networks, and it basically creates a convergence layer from which we can connect to everything money. But with this big vision in mind, we still have to start somewhere. And the way we started is by creating a mobile wallet, but with a card. We've partnered with MasterCard, and we created a mobile wallet that allows us to include all our bank accounts and debit cards and credit cards in one mobile device. But yet it allows us to use this mobile device anywhere we are, regardless of the infrastructure that is available to us, because there's a connected piece of device, which is the regular debit card that we are familiar with. It's based on the MasterCard network, so it's available everywhere. And once you make this transaction, it allows you to basically choose the card or the bank account where you want to charge when you make this transaction. You can also make the charge retrospectively. So if you made the transaction on one card, you can go back in time and change it up to 14 days later to a different account. So it helps you manage cash flow. It helps you manage your money better. It helps you to recover mistakes that you've done without actually connecting with your accounting software. And as we go along, we start introducing more and more features. So whenever you travel abroad, you no longer need to think about how you save money on FX or have a new card or use traveler's checks or go to the exchange ATM. Instead, just keep using Curve with your underlying card, and we'll save you between 4 and 5% on FX. You don't have to think about it. It just happened. Your entire spend lies in your hand. You can auto-categorize and send those receipts to your accountant with an email or connect directly to your accounting software. And we're starting to introduce more and more features like the rewards. So you get up to 5% cashback whenever you make a transaction at one of the 50 merchants we partnered with in the UK. So you go into a store like Marks & Spencer, you spend on a basket £100, and as you leave the store, you earn £5 immediately in your wallet. This is your money. You can spend it anywhere you want. And these kind of integrations will continue to come into Curve, eventually becoming convergence layer where everything is connected in one place. So that's basically Curve.
Great. Thank you. Now, I'm going to say this, and Jack's going to wave at me from the back if I'm completely wrong, but you guys can text 86688, and if you, before your question, if you put FGF growth, that should screen the questions up to us here. You can also do the old sort of Neil-Luddite thing of putting your hand up and asking as well. But to get things going, I'm going to start with some questions. If you guys have questions, text them in or just stick your hand up and we'll try and get to you guys as well. We want it to be interactive. So let's get talking about some of the technologies and some of the stuff that you've done in your companies. So, you know, what are the key factors that you guys considered when you were deciding on what technologies to use and how to build out your technology stack? Was there anything particular that was in mind that on the technical side when you started? Anyone want to jump in first?
Maybe I can start the non-CTO in the room. So the first decision that came to mind is how quickly can I get it off the ground, because as a startup, before the seed stage, you want to fundraise money as soon as possible, and especially in our case where it was self-funded in the beginning before we go to create a proof of concept for a product everyone think was impossible to create. Then the stack I've decided to do is what's available to me right now in terms of developers I trust, what would be the fastest to go. But when you create and think of a stack going forward, a few elements you have to consider is what will allow you to scale up the system. So in our cases, concurrent system with multi-threading is important. PHP is not a great solution for that, but Java or .NET probably, or Go or Erlang, if you really want to go extreme, is a great stack for that. Also, what's available in the market in terms of developers, what will attract those developers into the market. So not many understand Go, and not many developers in the market that can develop in that. However, it's kind of attractive. It's in a language, so some developers will come. Also, if you want to move fast, today everything is available online, and there's a lot of repositories you can reuse and get this inspiration from. So some languages has better repositories. Microsoft obviously has the best repositories when it comes to .NET, and Go, it's a new language, or Scala, you probably won't have. Personally, I'm not so sure it even has any standing in science. I prefer Java because it allows you to develop full stack all the way from the client side to the server side. Similar other languages that does that is Node.js as well. But again, it's hard to find those developers in London, based on my experience.
I'd agree with that, and I actually find I almost find it a little bit depressing, but that is where we end ourselves. We always find ourselves writing Java. Why? In our case, most of our clients are financial services. They all write in Java, and there aren't enough Java developers, but there are a large number of Java developers out there, and so actually, and the reason I find it a bit depressing is often the decision is not made on its technical merits, it's often made on business requirements, and that is if you're going to sell your technology as an often, in our case, integrating with existing platforms, that eases that mode. If you're selling into financial institutions and they use something like Java themselves, they are naturally more comfortable with it. Too often we're forced to make those kind of decisions for business reasons rather than on pure technical merit.
That's mainly your customers and partners that are saying to you, we're using this, or driving your decision making from their
and really on our side and their side, it boils down to the availability of developers. Universities worldwide pump out Java developers, businesses run large amounts of their stacks on Java, so everyone ends up converging on the same thing.
If I can hit on a slightly different topic, we live in the era of platforms. How important are the technical and social platforms to your businesses? I know, Shachar, you mentioned MasterCard as one of the sort of big partners you work with, and Alex, you mentioned Facebook. Yeah. How big an influence do they have on your technology direction, and how friendly do they play when you start to go up to them and say, look, I'm an early stage company, I want to get involved? Is there frameworks for that? What happens?
For us, Messenger was kind of a big gamble because back when we started, we were rather thinking of either we're going to do an app or we can just deliver what we want to deliver on Messenger. And it was just starting off back then, so we thought, it kind of reminded us of the early days of the App Store. There's not a lot of applications on the Messenger platform, so we can ride, that marketing wave that Facebook will probably do. Back then, Facebook didn't have a lot of, outreach, or we couldn't basically talk to them about, we're launching our whole business on your platform. What can you do for us? And also, we were tiny, so they wouldn't care. But right now, it's been great. I think it's going great for us. In terms of trust as well, we thought it would be probably worse than it is because people, they don't want to trust Facebook with their money, I guess. But sometimes it was actually better because Facebook is a known brand versus Plum. That who knows Plum, But if you run on Facebook, then that gives you kind of that signal, that element of trust. And I think right now Facebook is starting to build this whole thing called Discover. So they pick bots that are being used and they're good, I guess, and then they give you a set of requirements and they do a UX review of your app. And if you're good and if you satisfy them, then they're gonna get you in front of millions, I guess, that use Messenger. So I think so far for us, it's been good. Yeah.
Cool. Want to add anything?
On MasterCard front, so MasterCard most code is based on ISO 8583. It's completely legacy 70s kind of thing, but it doesn't really matter because the way you integrate is just regular API. So the black box we have in our systems is developed in one stack, and the rest are just different stacks that we can accommodate. A good developer knows how to develop. The rest is syntax. So whether the syntax is Java or PHP or JSONs or HTML, he will know how to develop that. So it's not a big deal really. You do want him to understand ISO 8583 to get the most data for that, but MasterCard will not change their network for us yet.
In terms of platforms, it's a really interesting comment that you make, though, because if you ask, I'm going to get in trouble if any of the Visa guys are in the room, but MasterCard just dominate that market at the moment, and it's largely because they do offer the APIs, they do offer it up as a platform, they are prepared to engage. Visa, I know now, having a chat with those guys last week, are trying to kind of play some catch up, but the offering of that as a service is very powerful, and actually that is developer led. So it's quite interesting.
You're kind of saying that the willingness of a large organization to engage with the ecosystem actually obviously drives value in the ecosystem and drives engagement. So.
Definitely, and if you're providing a service like that of MasterCard or Visa, if you are prepared to make it available, it really does drive adoption. MasterCard put APIs out there, and now everybody uses MasterCard. All these growing firms use MasterCard.
Awesome. I haven't asked you a question yet. Talk to us a bit more about, say, the technology side of platforms. So thinking more about, are you on the cloud, or did you have a cloud on-prem choice to make early on, or what were your thoughts initially?
So I guess for us, being able to use something like Amazon Web Services is very important, and we now have like a constellation of kind of 15 different subsystems, all interconnecting via internal APIs and microservices. So on your first question of which language is important, that question is less important as time goes on. If you can destroy and then rebuild each sub-service as your platform evolves. So particularly as you start the company, you don't necessarily know precisely how the company will evolve, and therefore you want to be able to iteratively improve as you learn more. So to that extent, having a framework available for you to evolve with the platform is very helpful.
That's actually good, because it brings us around to the concept of, the technology choices you made when you started out being, let's call it once-in-a-lifetime choices, and whether, what situations are they really once-in-a-lifetime versus, for strategic reasons or stickiness reasons versus, how often do you readdress those questions, and what are the right points in your growth cycle to address those questions? So maybe if I throw that open to the four of you and someone leaps on it like a raging tiger.
I can
go for it.
I think most of our choices are probably not once-in-a-lifetime choices. I have a few vendors in mind that they, through contracts or whatever, they kind of lock you in, and then if say you want to bring someone else on board, then you kind of have to use a kind of a split thing there where you support both vendors. But most of them, I think, for example, Messenger, it's not we can use Messenger but also build an app. Transaction aggregation, we can use, say, whatever, A or B. But, for example, for something like investing, if we want to offer peer-to-peer lending, and obviously that's more of a partnership. That's kind of more sticky, I think, than more on the kind of technology side of the integrations that we do. I guess to your question of which point do you kind of reconsider, or at which point in the life cycle, for us, it was clear that one vendor was not working well, and at that point we said, well, we cannot devote any more operational resources to this, try to monitor this thing that they're supposed to be doing well, right? So we looked elsewhere, and so that's one. And then two is like, if we need more revenue streams, then we're going to look for different and better things. So, yeah.
I think it's as you said, it's a matter of understanding the cost of moving away. So just understand the friction of moving away. So choosing a server infrastructure, moving away from Google Cloud to AWS, this is a big deal. It costs a lot of money. It touches every touch point of the system. So that's, I won't say once in a lifetime, you want to think it through before you start that. Choosing the MasterCard infrastructure, that's a high cost. Choosing the data layers that you're going to build, if you don't want to, you're probably going to revisit it as a company scale, but you don't want to revisit it that much. You want to build it for scale. Using different partners, ComplyAdvantage is one of our partners. You build a system such that actually you can afford to load balance and allow different partners. It's not nice to rebuild and refactor code with a third party, but it's an easier choice to make because it's an additional layer of integration versus a core building block of the system.
Anyone else want to jump on that, or should we move forth? Dave was about to go for it. Go on.
I was going to say that I think the challenge is that you you set out, and increasingly you're right, in this kind of modern world of microservices, to some extent, the idea is that you can just replace that service. But then there's that age-old kind of tech challenge of, well, you kind of want to standardize your infrastructure a little bit. And as organizations grow, what I have learned now over a number of years is making the right technology decisions up front is important, because there is a cost. And if you come back to the organization at a much later stage, that cost is much higher. People can endeavor to write generic code that is reusable as much as they like, but in reality it doesn't happen. And so I think often you do find yourself stuck with stuff.
I'm going to test my eyesight and read this question. That's quite a good detailed question. I'm just going to lean forward for a second. Does the panel believe enough tech is being applied to the service side of fintech offerings? Many fintechs seem embarrassed to acknowledge they work in the mass market service sector. Most are closer to KFC than Apple, if they were honest. Wow. That KFC's bad. Yeah. But
So the financial system is bad the way it's structured. The legacy systems, they're not secured enough. And you probably know it better than anyone else. Most chances our banks have already been hacked. They're just not aware of that yet. The reliability is not good. So it's hard to build fintech on top of a building block that is kind of shaky. And you see that kind of in the world of fintech, where you see downtimes every once in a while. You see sometimes even banks like NatWest or HSBC downtime every once in a while. And I believe it will change. There's a huge shift in technology on the server side and the infrastructure going on. Thanks a lot thanks to the big four driving this change, and new technologies coming in, and the ability to create those technologies. But this is difficult. We're working with the best of a worst bunch when it comes to infrastructure. And there's others who didn't make this right choice and actually have even worse SLA than what we have. And security-wise, we're doing the best we can, but it's an asymmetric market. The hacker will always find ways to hack. There's never a way to go around it unless you go quantum. And even then, the Russia will come in and take, there you go, and take the market. So it's yes, we need to have more infrastructure and investment, and PSD2 is trying to do that. The PSR and the FCA are trying to move that, but it's a shift that will happen in 10, 20, 30 years. We'll not see anything in the next 5, 10 years, which is meaningful enough until there's going to be the next turmoil. It will make another shift.
The companies, the ones that know they've been hacked, and the others
yes,
that don't know they're hacked yet.
You said that the banks often know they're hacked, it's just their customers don't know it yet.
Well,
When you think about the role of security, now that we're sort of touching that, the role of security and also the role of regulation in your day-to-day life, as the technical folks mostly on the side of your organization, how big an impact does it have on what you think about every day?
So I'll answer quickly, but I think ComplyAdvantage actually is better on this one. But I see the regulator actually as great. It's someone I don't pay for, free to give us advice and best practices of what to do. Right? This is like the best thing ever can happen to a company. So yes, you have to go and make some stuff and overhead on the company, but basically they're here to make us safe, to deliver better service to our users. So that's kind of on the regulator point of view. Security, I guess, it's top of our mind, of course, but there's two better experts on those two things.
Go first.
I guess I can extend security to mean compliance, and then I can give a much better answer, right? If you understand security to be compliance with terrorist financing law, then of course it's very important, right? And the potential fines if you transgress and facilitate funds to those subject to travel bans or financing freezes are material, and it can shut down your company, right? So if your question is it materially important, are there various mitigants that you can put in place, then the answer to those questions is absolutely.
Be interesting. How much of, obviously you're a security company, but then how much of your day is spent a lot on security, but if you're thinking back to your previous role as a fintech CTO, how much of your day was thinking about regulation and how much about security as well?
With hindsight, not enough. And I think what happens is you start out as a smaller organization, and you don't need to worry about that. Your fears are about growth, your tech stack, how do you get that kind of hockey stick kind of explosion in customers. But the challenge is that attackers largely attack the easiest target where they're going to see the biggest returns. And so, with all due respect, smaller financial technology organizations at the time are not the typical targets. But there becomes a point in that growth, once you've seen that hockey stick growth, that suddenly you do become a target. And a lot of organizations suddenly start to realize one day when, 1 minute they've just been focusing on improving that UI, and the next minute all their customer data's gone missing. And by that point, it's too late. So with hindsight, if I look at my previous role in financial technology, not enough time was spent up front thinking about security and how it fits into my broader stack. That is something that I think is, it's just something I've learned with hindsight.
The other interesting,
if I can add, because we're kind of at that stage where we're pretty small, say, a year ago. Right now, we're hopefully at the beginnings of a hockey stick, but we'll see. And I'm more of the opinion of it's not a matter of if, it's kind of a question of when. Early on, I brought like a security researcher. He did like an audit of our system. So I'm like, okay, fine, I built something, and I know that I have the basics covered. But every new partner we bring on board, they have their own requirements, they have their own like regulations they have to follow, and like all that stuff. So every time someone comes on board, basically what I'm trying to say is it comes in waves. This whole security thinking is like, I might think, okay, we're on a good stage, but then someone comes along and says, oh, we actually need to be doing X and Y, and then now I have to go back and think, and sort of it's constantly in the back of my head, but like doing things about it, it's kind of it's like a kind of a wave thing, and it's sometimes driven by external partners, I guess.
And that's kind of a fintech specific challenge. CTOs often beyond the financial technology world don't have to worry quite so much. There are plenty of companies where being a CTO means you purely get to focus on technology. For these guys, that's definitely not an option. Security is right up there.
It's interesting as well, because if you think about it, you said sort of appearing on the sort of radar for security issues, but also, as you scale, you'll appear on the regulator's radar as well, and become more and more relevant as you have more and more customers, etc. So it's an interesting angle as well. I'm going to ask Devi, have I got time for, I have one question here, and I want to see if anyone else has questions in the audience. Is that okay?
One last question.
One last question. Go on. Two last questions. Okay, we've one here. So where is the moat in fintech? Are there any providers they believe will build a tech moat like the social networks, search, etc. providers did? So creating barriers for entry, or creating, strengthening their own, let's call them castles or platforms, maybe thinking about the incumbent banks or the big providers. What do you think, Charlie?
There are far too many models in fintech in terms of asset management, lending, the different payment models to have a kind of single structural definition of fintech. But I think within different models, there are different companies that you can believe will have large moats. I'm sure Shachar has a master plan around the connected platform, which encompasses Curve being this final winner, right? I think for us, we also have a kind of plan to erect barriers to entry, I think given the amount of money going into these different models, there may be some with master plans which encompass defensible business models and therefore long-term sustainable margins.
So yes, we do have a master plan to rule the world, which is basically the disconnected finance platform. We do believe it will happen with Curve or without. There will be more than one winner, as much as there is more than one network. There is few ways of achieving that, few tactics. You can see how others done it, and you can imitate or leverage that. So if you look at the 50s, the way Visas and MasterCard went to the world, they created a global trusted network by enabling their customers, the banks, to deepen the relationship with the user. When you look at how Amex did it, they kind of took the playbook of Visa but created a defensibility through brand, because if you want the black card, you have to go directly to Amex. So it's kind of a mixture of playbooks that you can take and create defensibility from a lot of branding to a great distribution channels that creates defensibility eventually, but it's hard.
Cool. Any questions from the audience before we finish? Last question then. Roll it forward 5 years. What's the most important technology you think will be most important to your business when you look forward in 5 years' time?
Quantum computing.
That was easy for you. That's a pretty obvious one. Have you guys any other thoughts on that?
I mean, the biggest thing that we invest money in is the cliche of machine learning, and it's important now, and it'll become even more important in 5 years' time.
Okay.
I'll agree with that.
So I will be with Trailblazer for a second, and I truly think that connected humans will come. So there's a lot of startup companies going on in San Francisco and in Israel building chips that will connect to your mind. So you want to search something, you just think about it, and it happens. Whenever you think of the history, it's very easy to predict the future when you assume that the future will not change. There will not be any tectonic shift. It happened before 2007, and then the iPhone came into play, and everything everyone predicted has been actually not worked, because there's a shift of technology, an enabler that allowed you to do something else. If I'm thinking of those tectonic shifts, us enabling ourselves to connect directly into the internet, connect through our minds, maybe it's not 5 years, maybe it's 10 years, who knows, that creates a shift in the interface of which we are connected. So you no longer see people on the bus looking at a phone, you might just see people at the bus looking in air, and that shift will allow us to create new technologies. So I don't know how it will happen, but I'm pretty sure it would.
And if I can then...
And if you can put quantum technology, no one will hack you.
I think it's interesting you guys mentioned machine learning and AI. I'm obviously going to sit here and talk quantum computing, but most people don't realize, for example, IBM already have 2 of these things. They're regular breakthroughs, week on week, 3 last week. Google, Microsoft, and IBM have all announced that they plan on fully commercializing this technology within the next 5 years.
Israel had it 10 years ago?
Israel's had it for a while. The challenge really is it's historically been a science problem. Now it's an engineering problem. And we're very, very good at engineering problems. People are throwing a lot of money at this to take that first mover advantage. And the big player to watch this year is Google. People talk about this concept of quantum supremacy, which is where we get to the 50-qubit kind of space. Google expect to be there by the end of this year, and that's a very, very significant tipping point. And I think that's going to blow apart a number of things, huge applications in AI and machine learning, as these guys were saying, and then obviously from my own self-serving purpose, very significant from a security point of view. So.
Great. Cool. So new concept of biohacking. I like that. I'm scared already. Quantum scares me. I'm just going to go home and hide in the closet somewhere safe. So thanks to Charlie, thanks to Shachar, thanks to Dave, and thanks to Alex for a great panel. Thank you very much.
Thank you.